Yep. Hello. We're back, guys. Hello, guys. You know that the Facebook is down today, and as you can see, like even if I try to browse over my browser, it's not coming back. So it's still down. But when I tried to make a speed test on my internet, I had a connection. So today it's very bad because the Facebook is down. Even if I tried some on the YouTube, there are results getting to that Facebook outage. So like this, we try to play it. We can hear it.
Welcome back to Yahoo Finance Live. We are looking at an ugly day in the markets on this Monday with the Dow now down more than 400 points. The Nasdaq, the biggest laggard on the day, down about 2.5% here as we see a rotation out of tech. And Jared, I know you've been watching the market action very closely here. Facebook just getting hit today, not just because of the tech sell-off, but because of the news that's been coming out, particularly around this whistleblower.
Yes, and I'm going to add a third thing to that list, which is that Instagram and Facebook are suffering outages. As many as 20,000 people reported this on Down Detector. Anytime that happens, you'll see the stock take a small hit. But let's go to the Wi-Fi Interactive because this is a big one. Facebook down over 5% doesn't happen that often. It's the biggest hit this stock has taken since late October of last year, so almost the worst day in 1 year. And I think the woes for tech in general today, and especially the mega caps, as you noted, a lot of these other stocks in the NASDAQ 100 are red or dark red. That's something to it. But the whistleblower commentary, somebody who comes forward and names themselves as a whistleblower, they put a face to that. Suddenly the story gets ratcheted up in the national conscious. And I think there is something to be said for that story leading to the negative price action, or at least contributing to part of it that we're seeing today. In general, we're seeing a bad day for tech. So let's check in on the semiconductor space, seeing a lot of weakness there in NVIDIA, one of the leaders in that space. That stock is down 5%, Applied Materials down over 3%. And seeing something similar in software. We're seeing Adobe down 4%, Atlassian over 3.5%, CrowdStrike's that cybersecurity firm down 5%. So I've been tracking the weakness in not only semiconductors but also software over the last week or two. That's when they started rolling over, and that's just continuing. And it kind of feeds into the bond market here. I'm going to go over to the 10-year T-note yield and just get an update on what's happening today. We saw it up as many as 3 basis points earlier. It's up 1 basis point now, but that usually lights a fire under the value stocks, energy and financials, and the stocks that take a backseat are those growth stocks. So a couple more screens here. I do want to check out the banking sector. And this is the energy, so we'll get to banking in a minute. Exxon is up more than 1%. By the way, crude oil, I'm looking at it. It is up 3% to the highest level that we've seen since 2014. I'll be doing a deep dive on the energy market at 2:30 p.m. today. And as promised, I do want to check out the banking sector before we go. So that has slipped. A lot of these stocks slipped into the red. JP Morgan down just slightly, but on this burst here, close to the open, it did record a record high, one of the few that I saw today. So interesting sector action. I will leave it to that. And you can see only energy and utilities now in the green, Akiko.
Yeah, and speaking of energy, of course, that getting a bump from what we've heard from OPEC Plus, that they're going to be sticking to the agreement to pump out 400,000 barrels per day in November.
So if you notice, guys, it's like there is a crash on the market. I believe so. So there's a lot of rumors here that the market maybe it's crash.
In part two of our exclusive interview with former President Donald Trump, I asked him about the issues that will help him determine if he's going to run for president in 2024, as well as his.
So let's try to dig deeper here. Maybe the Facebook might be related some the market. maybe the market has been crashed. So there are some rumors here like the Facebook stock price also down. So it might be related some market crash. The stock has been down today or it's going down. It's crashing.
Real. The blowback is real. It's different this time. I think that these documents, forget the actual whistleblower, the document's pretty devastating because precisely what she said. You either have to be a single source of truth these days or you go for power. They went for power. David, you know we haven't even talked as much as we should about Apple opt-in, opt-out.
Yes.
For the club, I've owned this thing for for about 200 and maybe, geez, 300, almost 300 points.
Okay.
And I feel very uncertain.
Do you?
I feel that this time it's probably
You
true.
said this could be different.
This time's
and
different.
What we point out is that over time, we have sat at this desk many mornings, or certainly during the course of the show, and discussed the latest criticism of Facebook, latest concern, latest focus of its critics, and yet the stock has obviously done nothing but more or less go up over a longer period of time, hitting as high as over $1 trillion market cap, though retreating recently, in part because their business continues to grow at a rapid rate. So your point now is that perhaps that will stop, that perhaps
Yes.
the advertisers
Yes.
are thinking differently?
That and Apple and the new
which
operating
is
system.
the iOS, which you have to opt in.
Right.
And by the way, that's not just an issue for Facebook. That's an issue for any number
We gloss
of
over
the
it.
apps that we all deal with every day.
It seems that the stock has been crashing, or a lot of companies now in the market. Seems that
That collect your information and obviously try to use it to help their business or a center of their business.
Right now, Apple has chosen to be a single source of truth, as Mark Benioff says. They've been willing to say that's clearly not this opt. They don't want us to be able to get stuff that we don't want. Will the documents be used against Facebook? I think that if you are a major consumer products goods company, there'll be someone in the room at the board who will say, you know what, this is different. Now, look, I use Instagram for our restaurants. It's terrific. The small business stuff is terrific. I've been a somewhat defender the whole way, saying that, you know what, I didn't think their business would be hurt. Now, the documents indicate if you made major changes, would it matter? Everything always matters to make major changes. But you'd have to choose truth. And I look at those documents, and I don't think they chose truth. I think they chose obfuscation, and clearly they chose daily average users. I mean, I go through this with Twitter, where I say, listen, would you please take down the horrendous things that are said that I can't have my children possibly look at? And they will not do, they'll say, yeah, we'll take some down. But the first, they use a lot of First Amendment protection, and, you have every right. That bullying is a sensitive topic. Sensitive meaning that they won't take things down even though you're being bullied. So I'm looking, all of social media, as Dave and I were saying beforehand, could be really upended by what Apple's doing. And that is more important in some ways than what the documents showed. But look, let's just admit, there were more people who read that series and watched 60 Minutes than there's been any time that Facebook has been on the firing line. And, I mean, heads have to roll. I have to see serious heads rolling. I mean, people were involved. Now, look, I don't think that Mark Zuckerberg has to roll his head.
Well, although there is the idea that maybe his super voting shares are at risk, right? Maybe somebody comes in and says, look, let's rearrange the ownership structure where he does have more accountability. Is that possible?
Well, when you have the voting share, you have the voting share. So you need a vote in order to do that. So basically, he has complete control in perpetuity, which is important to point out because that wasn't always the case.
But this time's different. Advertisers.
Yeah.
Apple. I mean, I'm just saying that he needs to do something in order to be able to restore some faith here. Do you think faith was lost, as I do?
What, that he would voluntarily give up voting control?
No, that he has to try to figure out a wholesale
And change
house.
his board?
Well, I just think that he has to say, listen, we've done wrong. How about this? How about something that I also wish that Carlos Watson had done? We've screwed up. This is bad. Our culture has to change. We have to start giving the resources that are necessary to this. Now, I don't think it's a David, I don't think it's a totally corrupt company. But that's a pretty low bar.
Yeah, is
that a low bar or what?
Well, just by saying that, I think you make the point.
Steve Weiss, I start with you today. Cramer says of the activity in the stock and the story around Facebook today.
As you can notice, guys, the market has been crashing. So if you notice, all in the internet or in the YouTube, those videos that are coming in now, it's about the stocks. They are going down.
This time is different. This situation is no longer not at risk. He says that because time and time and time again, negative story equals no negative stock reaction. Clearly, this time may be different. Facebook shares are down significantly today. They have been throughout the morning. They are off the lows. You sold half of your position this.
You see, this guy said that the Facebook stocks has been going down. It's crashing down.
Morning, I'm told.
Yeah, I sold half first thing this morning. And frankly, I wouldn't have done it in reaction to today's news. I'm glad I did because it was at a higher price. But I've been thinking about selling for a while. If you recall, if you go back to October of last year, I'd sold my entire position and only re-entered in May of this year and missed a significant move. We're still making money in. Look, I have no idea if the whistleblower is right or wrong. It seems we're in an environment where everybody's guilty until proven innocent.
I don't know. The whistleblower has receipts.
I mean,
there's documentation of what the whistleblower said, right? So let's deal in fact,
I understand,
not fiction.
But well, we will deal in fact, and you haven't seen what the whistleblower has in her possession. You haven't seen the other side either. So we don't know what the facts are, Scott. But here's what I'd say. That doesn't matter in terms of the stock. What matters is that advertisers are going to look this and they're going to say, no mas with Facebook. So they'll go elsewhere. TikTok's not the answer. Look, there's a lot of truth, obviously. We know it all. But I'm not sure, and I don't know the answer. Facebook has been the evil empire. That's been the perception, whether it's reality or not. We know that Mark Zuckerberg has been arrogant. So all that adds up to the fact that this is not something that you want to buy here. You want to wait to see how it turns out. My concerns had always been about this, about hearings, just a stream of bad news flow, and you're not going to get any good news flow out of this. So that's why I sold half. On a pop, I'll sell the other half.
The two biggest issues here, Joe, are what Cramer talked about this morning and Weiss references just now, whether advertisers turn away because in large part it's been a duopoly between Facebook and Google in terms of advertising. Do they go to Snap? Do they go to TikTok? Do they go to somewhere else? They must change the algos, said Jim Cramer. I will not support them until they do. What do we do? So many people on the show own the stock. Shannon owns it. Jason owns it. Weiss owns it. Joe, the Joe T owns it. Kerry owns it. Degas owns it. Pete owns it. John owns it. Brenda owns it. Jenny owns it. Sarat owns it. That in itself speaks to the broad level of support this company has enjoyed, regardless of multiple stories throughout the years that are certainly negative. The threat of regulation on Facebook, none of it. The stock's been Teflon. Is it different now?
I do think it is. And I wonder where this stock would be if it did not have Instagram. I think Instagram is one of the most powerful catalysts for Facebook. But advertisers will be taking a second look. I've not owned this stock personally for many, many years. I've never been a fan of the leadership. I've never been a fan of prioritizing some of the things that management seems to be doing at Facebook. So I do think it's different. I think if you hold the stock, you want to look at the technical formation. 315 is where the 200-day moving average sits. The Facebook stock price has not traded below that for the better part of the last 19 months. A challenge below there is going to lead to further deterioration. And understand, you're in a buyback blackout window, and a lot of the thesis surrounding Facebook was the ability for them to buy back their own stock. They can't do that right now.
Jason, you have a 3% position in the stock. The company is out today on CNBC on multiple programs thus far. Not Zuckerberg, not Sheryl Sandberg, the VP of Policy Content, said on Squawk Box, any suggestion that we are trying to prioritize engagement bait is blatantly false. The global head of safety was just on. Facebook is always trying to do better and trying to do more. I'd crumble the paper up and throw it over my shoulder, but I have important notes on it, and I can't afford to do that. 3% position. Do you change the position today?
Yeah, so it's a good question, Scott. Obviously, yesterday, that interview in 60 Minutes was very damaging. I think what I would say about the stock and why I've always owned it is, they have 2.89 billion users. So they have a lot of presence. They have a lot of reach. I do think that there's always been headline risk with Facebook. This hurts the stock. I think this might be different here, but I think, for me, I'm just going to continue to watch it over the next couple of weeks and see where it heads. They have the cash flow, they have the IP, to make a change here, a meaningful change, and we'll see what they do. We'll see what they say and, where we go from here.
All right, Shannon, in terms of where we go from.
So if you notice, there's a lot of rumors now that the Facebook is been down due to the market is crashing. So the stock is being down, going down.
You know what's nuts? It turns out that our old friend Cramer was right. Back on September 14th, I did a video titled, what did I title it? It's titled, What the Stock Market Does Every September is Shocking, Do This Now. I'll leave a link to the video here if you don't believe me, but back then, I said that if you were a short-term trader or you cared about the short term, September 17th is likely the date that you want to start selling or trimming your positions. You also want to consider opening up hedges against your positions and or against the market indices such as the NASDAQ and the S&P 500. So we'll revisit that trend because currently it's playing out perfectly so far, and I'll give you my assessment as to when I think all of this will be over. By this, I mean the market bloodbath that we are currently in. As I always say, I'm not Nostradamus, so I'm not going to predict the exact date that this will happen, but more so talk about the levels that I see in the charts. But before that, there are some extremely important news items and factors to consider for the next couple of weeks. Again, I know I say that every single video, but honestly, this week, there's just so much to wrap our heads around. I really have to go over this stuff with you, especially if you care about your portfolios. So far, we've been right on the money with the trends that we saw in September, and we need to monitor these things that I'm going to discuss with you right now for October and beyond. And then I'll give you a truncated list of stocks that I'm looking at currently, so you definitely want to stick around till the end. If you're new to this channel, welcome to The Traveling Trader, your source for concise, regular, non-BS market updates. If you get anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below. Let me know what stocks you are looking at because the market is looking juicy right now with a lot of deals on blue chip stocks. All right, in the Discord group, I outlined all of the events that I'm monitoring this week and next week. And I also sent out my watch list. By the way, if you want access to all of our watch list portfolios, trades, options, stocks.
Let's see again. So another thing here. Facebook is down. All market crashing. So it's red alert. Facebook, Instagram, and WhatsApp is down. Game over.
It's incredible. Facebook that belongs to Instagram, or Instagram better said to Facebook, it's all down. It's almost 15 minutes now. I just was running some ads for myself, and after trying to run my ads, this is me, Norbert Simonis, my website is working, so Google is working, everything is working, but it's just a matter of time. And if you want to know more about marketing, how to do business, or anything else, that's me.
Yes, it's
Don't
crashing, guys.
forget to subscribe on my page and follow me for more information. Talk soon, guys. I hope this issue will be fixed soon and we can use Facebook and Instagram continuously as usual. Talk soon, guys.
Facebook stock crashing, crash. You see, another rumors now. Facebook stock crash coming. So this guy mentioned it 2 weeks ago. So it's up to just
Here to break down the headlines, Nilay Patel is editor-in-chief of The Verge and a CNBC contributor. Delano Saporu is founder of New Street Advisors and also a CNBC contributor. And so is Steve Grasso, who is also here, and he is also the CEO of Grasso Global. It is great to have everybody. What a day. Let's start with some of the biggest movers. Facebook is probably the sort of main one here, down 5.5%. They've got these reported outages for everything from Facebook to Instagram to WhatsApp. They've got last week's whistleblower revealing herself to be former product manager for Civic Misinformation, saying the company is acting purely in self-interest. The company is still up 20% this year, despite questions about its practices and social impact. So let's start with you, Steve Grasso. Is Facebook kind of the reason why the market is under so much pressure today? Is it just getting swept up in all of this? Is it just coincidental, I guess, that it's down this much? Or what do you make of, how would you relate its own problems to the problems the broader market is experiencing, if there is any relation?
Yeah, so it doesn't help, to your point, right, Kelly? And on the show, you cover the stories du jour, obviously better than anyone. And you notice that it's been about China, it's been about Chairman Powell, it's been about rising rates, it's been about the rotation out of growth into value. So this is the latest of the stories that are hitting the market. But if I look back on a chart and go back to the summer of 2020, Facebook was under a lot of pressure there as well, and that was bought. I do agree, I should say, with Jim Cramer that this time appears to be different. Having said that, I don't know how different this is going to be and when buyers will step in. But back then, the stock fell 20%. We're down from peak about 16% or so. Mm-hmm. Another couple of points.
Are you a buyer, Steve?
I wouldn't be a buyer just yet, but I'm just giving the viewers out there, 315 is your 200-day moving average. That gets you right in line with the sell-off that we saw in the summer/fall of 2020, if you were thinking about buying a dip in Facebook.
So that's certainly one line to watch. Delano, are you a buyer here?
Yeah, because I think, as mentioned by Steve, there's a lot of factors at play, and I think you should be a buyer here. As mentioned, this dip is about 15 to 60% off its highs. We looked at the bad news flow, and we obviously know that there's going to be some more regulatory scrutiny and some legal risk that's at play here. But I'm looking at, if you pull back the chart, as mentioned, if you're looking at this as being one of the bigger and better mega market cap performing stocks this year, as well as the platform, right? As well as the family of products still growing at about 3 billion daily average users for their family of products. And also that whole macro level event of digital advertising, digital spend, that's still a great tailwind for Facebook here. And I still think that comes to play at some point. Buyers step in. So you probably want to be careful at what entry points you enter, but you should be looking for opportunities here, Kelly.
Nilay, let me phrase the question this way. Is there anything that regulators could do that would hurt Facebook without helping investors? In other words, most of the time, if they pursue more regulation, it helps Facebook. They're the biggest. They can comply the best. They can outdistance everybody. If they break them up, probably helps investors. They wouldn't mind, seeing Instagram separate from WhatsApp, separate from Facebook. Can regulators do anything to punish Facebook that won't actually help its long-run financial performance?
I think there's a lot regulators want to do. I think right now we are so exhausted by endless Facebook scandals that we might not be seeing this one for the scale that it has and the impact that it has. What you have with the whistleblower is Facebook's own research, Facebook's own employees saying this company is hurting people in X, Y, and Z ways, specific ways, with teen girls and body image issues, with radicalization. That stuff is cannon fodder for regulators. The whistleblower says she doesn't want Facebook to be broken up. She's obviously on the Hill tomorrow. Facebook itself says it wants regulations. I think it wants to capture the industry in that way. I think every regulator in this country has finally been handed a sheet of papers from Facebook itself that says this company is doing harm, and it knows it. And I think it's going to take a lot for Facebook to get through this in a way that doesn't result in a company being radically restructured, whether that's a breakup or whether that's a governance change, which I think a lot of people would like to see. Something is coming this time.
It seems to me, Delano, maybe the only two sources of pressure could be massive divestment on the ESG front, although, again, if you look at the financial performance of Altria, not necessarily a bad thing. But maybe you could destroy the profitability by requiring them to have such a humongous content curation staff that it literally, the platform economics are no longer attractive. Does that make sense to you as an investor, and do you see that risk looming at all?
Yeah, that's certainly a risk, and I do agree with some sort of ESG front where Facebook is bringing to the forefront maybe a plan on how they're going to comply and how they're going to make the platform better. Because we know, as mentioned in the report, that they are a lot of the reports and a lot of the content that's being shared is driven on some non-factual information, on some harmful information. And so if they're bringing forth this and kind of getting in the forefront of it, this could be a good opportunity. And we want to see some governance changes that could potentially be strong for investors. And I think that'd be the best way to go as from an investor standpoint.
Yeah, so yeah, that's it, guys. So a lot of rumors.
Kind of under the radar, but it shouldn't be.
The
The
market
dollar's
has
been
been
rising
crashing.
over the past month by nearly
It's related.
2%. It could have a big impact on some of the big companies that do business all over the world, not to mention commodities. Let's bring in Seema Modi now for more on the potential impact. Seema?
Kelly, the minute the dollar starts to strengthen, strategists across Wall Street examine which companies are most at risk. The macro team at Oppenheimer says technology and energy are the most vulnerable, with over half of their sales outside the U.S. The stronger dollar, remember, makes their products more expensive overseas and pressures profits. Within technology, the chip stocks like NVIDIA, Texas Instruments, Maxim generate over 70% of revenue internationally, according to Goldman. Industrials are also high on the list. After years of expanding overseas in new markets, Melius Research says 3M is the most exposed given its presence in emerging markets. Worth noting, shares of 3M were downgraded today by JP Morgan to neutral from overweight. The stock is down about 9% in the past 4 weeks. Taking a step back, though, Kelly, the dollar strength, supply chain constraints, the ongoing uncertainty around China, there's a cost to going global, right? And one question portfolio managers are trying to answer: do companies start to rethink their plans to diversify? The percentage of foreign sales, in fact, of big U.S. companies has come down in recent years, and Oppenheimer says that is due to the dollar, geopolitics, COVID as well. The market, though, starting to take note of this in recent weeks. Just take a look at the S&P 500. It's been underperforming the small cap index, which does have more of a domestic tilt, and that's a 1 month chart right there, Kelly.
It's a great point. There's also commodities. So if we look at even a day like today, if you have crude rising with the dollar rising as well, it's almost like it's got twice the oomph that it would otherwise if it was just the flip side of a sinking currency.
And it's these type of market dislocations when you can't always provide an exact narrative as to why the commodities, right? Well, OPEC, we know, is a big part of the story today. But yes, these type of currency fluctuations, the broader implications it has on not just commodities, or big companies like Schlumberger, by the way. I was just looking at this great report from Goldman. Over 55% of its sales outside the U.S. It's these type of oil, energy, mining giants that have now so much more to think about, right? Not just what's going on in China.
Yeah, absolutely. Seema, thank you very much. Our Seema Modi.
Shepard Smith here. Thanks for watching CNBC on YouTube.
All markets is crashing. Seems that a lot of issues now in the market. Many people knows this is going to happen, or they have predicted it. Might be. A lot of people predicted it.
Woo, baby! Amy, just when you thought it couldn't get any worse here, folks. Oh my God, WhatsApp and Instagram are down today. Facebook getting devastated because of that. You got Evergrande Group out of China halting the shares traded in the broader markets. Oh my God, after we saw pre-market trading yesterday with the S&P up 1.5%, the Dow up almost 2%, and the NASDAQ up 0.5%. Clearly pre-market doesn't mean crap here, folks. So consider hitting that like button. Let's enjoy the pain together by first of all taking a look, obviously, at the broader market before we dive into this more particular news, because literally I made a live stream yesterday talking about how crazy it was that the pre-market was up so much and my bold stock market predictions. And just taking a look here, VOO today down 1.5% instead of being up 1.5%. Apple almost down 3%. Microsoft, Facebook down almost 5.2%. And the only thing in the bloody green is my most overvalued stock, Tesla. It hit over 800 today, and somehow it is still in the green by only by points of percent. And anything in the green today is only up by points of percent. There is no trending company that is up that much at this current pace and time here, folks. And anything that is trending is something you've never heard of before. And just taking a look at Bitcoin today, guys, it is trading up on this news, surprisingly. And gold isn't really following suit in any major way. You really think in these volatile moments, gold would be shooting up back above like $1,800 an ounce, but it ain't, which is kind of surprising. Now, this is kind of like segue news, but I find it fascinating that we finally got FINRA releasing the August report where it looks like we're on track to be over $1 trillion in margin debt. I don't know if this is a good thing or bad thing or how it directly correlates, but I always feel like when the markets get really shittered, a lot of it has to do with people probably paying off margin or cushioning margin blows, which leads to a little bit more of a further sell-off in the market. But a one-to-one correlation is probably way too hard to kind of pin down at this scale, but just take a look at Facebook. Now is the cheapest S&P top 10 stock, trading below 24 PE, which to me is an insane buying opportunity, down 5.7% at this moment here, folks. In the last month, down 15.4%. Facebook hasn't seen a dip this hard, literally year to date. This is the first major dip, and obviously it's just because Instagram and WhatsApp are down. So I'm so sorry to anybody in our groups. I haven't been able to talk to a single person, and thank God I got through my work this morning because I talked to everybody globally on WhatsApp. So this is absolutely staggering. Actually, while I'm sitting here, by the time this is live, I really hope it comes back. This could be like a short-term dip buying opportunity because obviously if WhatsApp, Instagram, any of this stuff comes back online anytime soon, people will probably pick up the dip. But as I sit here, and you can't see my phone because it's getting bleeped out, but you can see that the little thing is spinning right there, just showing no signs of hope right now for WhatsApp, which is pretty staggering considering most people internationally use it as a phone service. So I'm curious if it is down internationally. And speaking of international news, we got China Evergrande Group absolutely halted right now, and this is cool. And the reason I think this is cool is because I'll get into the actual news and what I think is going on in a sec, but the stock itself from the bottoms it hit a week ago is now trading up 30%. And I think it's so funny because there's a lot of day traders out there and people swing trading this, I would imagine, that bought into this and have been dying to sell it at this point, being up 30% and can't because the entire thing is halted. But this is actually good news because it sounds like China isn't going to be bailing them out. It says shares in Chinese property firm Evergrande, the Ariana Grande of foreign investment crashes, suspended pending or obviously suspended their trades pending major transactions, which means it sounds like they might be getting bailed out by a buyout from another conglomerate, which is probably pretty good news overall and is probably what will continue to send that stock higher depending on how this transaction resolves itself. But there is no trading right now on the 1 day for Evergrande. Now at this point, guys, because this market is absolutely horrifying to people, and if you're holding small caps, you're getting devastated. And I mean, I keep saying this, guys, just remember, it doesn't matter how much stocks drop, they can always drop lower. I mean, that's why we're seeing BABA in the 130s today. I mean, the destruction in small caps is getting absolutely painful for anybody that's highly leveraged in that direction. But there's been a lot of cool bull case thesis coming out lately, guys, from a lot of the big investors like Cathie Wood, who kind of talks about some of the current macroeconomics. So I want to take a quick listen from an interview she had last week, and I'll see you in a second.
Gundlach and Howard Marks, and I think Stan Druckenmiller and Ray Dalio, all of them, I think, have been very, very concerned about a deflationary bust. And we agree with them in this respect. We think it's going to be balanced by a deflationary boom. So that's where we differ. But where we agree is that there are companies who thought the world would never change and have been, again, catering to short-term shareholders who wanted that extra penny or two in earnings, and so got it by having the companies leverage up and take more debt and shrink the number of shares. And they've also been focused on dividends. They are probably saddled with products and services that will become obsolete because of the record-breaking amount of innovation taking place today. And in order to service their debt, they are going to have to cut prices and move those goods and services that are on their way out anyway. So I am concerned about that. And I think there's going to be a lot of confusion around it as well. There will be a lot of job displacement. There will be, no question about it. In fact, when we started our company in 2014, Oxford University had just put out a piece which said, and it was about the United States, that said 47% of all jobs in the United States would be lost to automation and artificial intelligence by 2035. And they left it there. Hair on fire, headlines screaming, a lot of fear about automation. We got the question every meeting. And what they had neglected to do, which we did, was finish the story. So with automation and artificial intelligence, productivity is going to go up dramatically. We think more than it ever has, certainly in modern times. And with productivity increases comes more wealth creation and more GDP creation. And according to our estimates, in the year 2035, because of automation and artificial intelligence, we believe that GDP here in the United States will not be 28 trillion, which would be, if you drew the growth, linear growth, that's where it would be, but instead will be $40 trillion. And it is our job, focused only on innovation, to figure out where that extra $12 trillion is going to come from, and then to educate and orient our investors, of course, but also parents and grandparents. You know, how should you educate your children? You know, how should you steer them so that they are on the right side of change?
So in this market, obviously, because there's so much going on, guys, you can never predict whether the markets are coming or going. And many of us have been devastated buying in over the last week. I wish I waited a little longer, but that's always, you know, looking backwards in time, that retrospective look that devastates you because you're like, damn it, if I only waited another week, my God, I could have bought my Google shares today for the low 2,600 range. However, what I'm thinking about doing is paying attention to when WhatsApp and Instagram comes on. And if I see a correlation in that stock price, I may do a short-term swing trade on Facebook. I feel like I'm pretty leveraged into this point, but these buying opportunities are rarities. And I honestly think that, you know, if Instagram is down for a week, the stock's going to get slaughtered. But if it's only down for a day or two, this news will blow over like it has in the past, and the stock will likely rebound. I wouldn't be surprised by 5, 10, or 15%. Easy opportunity to take advantage of that. You can mark my words for it, though I am not a financial advisor, so do not take this as financial advice here, folks. But at this point, I pass the question off to you. How are you guys holding up? Thank God this market is downtrending for anybody looking to buy these dips that have been waiting for paychecks. This is your opportunity. So don't sit on your hands here, folks, because we never know how low it goes and we never know how high it can go right after. So stay cool, stay awesome, and damn it, I look forward to catching you in the next one.
So yeah, it's been crashing now. The market has been crashing. It's been predicted. But we might not know that something is happening. But we might not know happening. It could be a market crash. We don't know what's happening because we don't know these things are being predicted or they are controlling it. We don't know. So a lot of traders now are being selling their trades. Maybe
Welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm Leslie Picker in for Bob Pisani today. Stocks may have snapped a 5-quarter winning streak, but that wasn't enough to stop the red-hot run ETFs have had in 2021. Even despite the dreaded September swoon, ETFs still managed to rake in $46 billion in inflows. Now the 10th straight month of inflows north of $40 billion. Still on pace to break records by year-end. Meantime, investors clearly trimmed their exposure to longer-term bond ETFs in favor of short-term government bond ETFs as rates started creeping steadily higher. So let's dig into these September flows a bit more, key sector trends, and what that all spells ahead for October, typically the most volatile month of the year. Joining us now is Dave Nadig, Director of Research at ETF Trends, Will Rind, founder and CEO of Granite Shares, and Matt Bartolini, head of Spider America's research at State Street Global Advisors. Gentlemen, thank you very much for joining us. Dave, markets go up, markets go down. Just in this recent market, though, it feels like flows just keep coming into ETFs. Is it such that this is still kind of a bull market phenomenon, or do you think that even in the case of a significant downturn that we will see these types of flows into ETFs?
Actually, history would suggest that the more volatility we have, the more people are going to look to ETFs. Remember, every time we have one of these big drawdowns, and we really haven't had a big one here, it's hardly been a crash, but every time there's a drawdown, there's an opportunity for people to sell an underperforming active manager that maybe isn't a mutual fund, or to take a hit on a tax position that maybe they've been hanging out to wait on. So these are really great opportunities for people to reassess their portfolios. And when they do that, they often end up back in the ETF market, often looking at fairly low cost, fairly, plain vanilla type equity exposures. So what we've seen in the very recent history in September was still about a 2-to-1 equity to fixed income ratio in those flows. That's a little bit less than it has been. We've been running about 3-to-1 equity to fixed income. But more importantly, when you get under the hood, it does look like people are starting to play a little more defense with some inflation plays. We've seen things like a lot of flows into real estate. That was a bit of a surprise to me. People are really looking for opportunities to profit from some of this maybe embedded structural inflation.
Yeah, it does certainly seem like an inflection point. And of course, fixed income in terms of ETFs has just boomed over the last year or so in a way that it's not too surprising to see people taking advantage of in this new regime, or looking ahead to a potential new regime in terms of monetary policy. Matt, on that front, what sort of sectoral shifts, what types of product shifts have we witnessed in recent weeks, recent months with regard to ETFs?
Yeah, I mean, from a sector perspective, one of the shifts we've seen is that there hasn't been some. So sector ETFs have taken in have had inflows in 12 consecutive months. That's the longest streak they've ever had. And over that time frame, they've taken in $92 billion. And I think that speaks to some of this disparity or dispersion within the markets right now, where investors are trying to utilize beta instruments in an active manner to tactically adjust portfolios based on prevailing macroeconomic data. For instance, in the past month, energy ETFs had over $2 billion of inflows as the spot price of oil continued to creep higher. And we also saw the inflows into energy ETFs coincided with an uptick in call volumes. So we saw, again, like a multitude of investor types expressing viewpoints within ETFs. Now, there was a bit of a shift when you look at it from a cyclical versus defensive perspective. And it's really sort of reflective of some of the lack of leadership in the marketplace. In the last 3 months, you had defensive sectors taking in more, and then it was cyclicals. then it was defensive, now it's cyclicals again. And even within that sort of cyclical camp, energy and real estate led the way, but a lot of people sold out of financials, which I think is interesting given the relationship to interest rates. But all told, we're still seeing a lot of investors utilize the construct of sector ETFs to play specific tactical asset allocations, particularly when return dispersion is so high. And I'd expect that to continue because we are heading into the fourth quarter, typically is the more volatile quarter historically, with also some pretty decent outliers. But also that macro risk calendar is pretty full when you think about what's going on down in Washington.
Yeah, that's absolutely true. And especially as you mentioned, as we are now officially in the fourth quarter of the year, it's expected, at least from a calendar standpoint, that we could see some more volatility.
So there's a lot of going on now because of the market crash.
Our first guest today is Scott Nations, Chief.
So it could be a Facebook because of this Facebook. It's crash. They have biggest loss in the 3 years ago with Facebook. Some people are predicting it.
Hello, I'm Michelle Mukori, and this is Kitco News coming to you from New York. And my next guest is warning that a massive market crash is coming in.
Like this video, it's since it's 5 days ago.
October. Robert Kiyosaki is an entrepreneur, personal finance guru, and the author of more than 26 books, including the international bestseller Rich Dad, Poor Dad. Robert, good to have you back with us on Kitco.
Oh, thank you, Michelle. I appreciate your being part of your program. Thank you.
Well, we appreciate your insight, and we want to get those insights on this October crash. Secretary Yellen is warning that if Congress doesn't raise the debt limit by October 18th, that there'll be a financial crisis, a calamity, as she calls it. Is this what you think will trigger this October crash?
Well, I think it's already been triggered personally, because after I posted that market crash, the S&P 500 is really the S&P 7, and it's being held up by Treasury Secretary Yellen and Powell. So there's no correlation between the economy and what Yellen and Powell are doing. Now, I'll say one more thing, is that I'm a little strange in that I like crashes. So this next crash is going to be really, really good, but it'll bring down gold, silver, Bitcoin stocks. But the good news is a crash is a good time to get rich. So that's why I'm optimistic, and I'm very optimistic on gold, silver, and Bitcoin, not on stocks.
All right. Well, let's first focus on the equity side of this crash, and then talk about gold, silver, and Bitcoin. So what do you think essentially really triggers this? When you say crash, how many percentage points are you talking here? What do you anticipate?
Well, the big debate is there inflation or deflation? And if you look historically, what's happened today is the nominal debt to GDP is a correlation of M2, the volume of money, times the velocity of money.
Right.
And the reason Yellen and Powell are scrambling is because they've expanded M2, so everybody thinks there's going to be inflation. But velocity of money, which is what Jim Records and I always talk about, the velocity of money is plummeting. People are not spending. So they pump all this money in, prices go up. Meanwhile, the Asians are catching up now. The ports are finally open. So it is transitory inflation. But the problem is we're stacked with this massive debt, and all it's done is bump up the stock market and real estate market. The money has not gone into the economy. That's the sad part. So the rich get richer, but the poor and middle class are getting poorer. It is tragic what's happening today.
So what sets this off? Do you anticipate that there won't be some kind of way to raise the debt ceiling come October 18th?
Well, they can do all they like, but I'll just say it again. It's M2, which is money supply, times velocity.
Right, but what's the trigger? What is the trigger that all of a sudden destroys investor confidence, which is already a little shaky at the moment when investors really look at the fundamentals, but what's the trigger that really shatters investor confidence in the equity markets?
Well, I don't know what it'll exactly be, but you can't keep printing fake money. You know, that's M2. And the velocity of money keeps dropping, but the debt keeps going up. So you and I don't have to go to Harvard to understand that's not good. So they're just going to keep doing the same old thing. And meanwhile, you know, that's what we're doing today is actually going to kill the economy too, because you and I are now on, let's say, Zoom. So technology is going to wipe out more jobs. Like, who's going to fly? Who's going to stay at a hotel? You know, I can now do more seminars in a day. You know, I did one the other day. I did a recording in Europe. I did one in the States, and then that evening I did one in Singapore. I don't climb on an airplane? So meanwhile, they're trying to keep these dead industries afloat, and somebody's going to say, hey, it cannot go much further, and it's coming this October because the velocity of money is now too slow. Savings are going up, spending is going down.
Well, look, I mean, technology can be deflationary, as you say, but, you know, when it comes to in-person meetings and webinars and conferences, you can't really replace that in-person connection that you get. But yeah, to your point, the fact that people are having Zoom meetings has certainly reduced business travel, certainly very much for the time being. I'm interested, though, Robert, why you say that when this equity market crashes, that gold, silver, and Bitcoin are all going to crash as well.
This is going to be the biggest crash in world history. We have never had this much debt pumped up. Debt is the biggest problem of all, but that's called M2, money supply. And the debt to GDP ratio is out of sight. So when it comes down, which it brings everything down with it, that's when I'm going to be buying more gold, silver, and Bitcoin. If I could say a couple of more things, this published this book here. It's called The Capitalist Manifesto. It comes out November 10th. And I want to give people the big picture. The reason I don't care for Yellen or Powell, because they're both Marxist. And when I say that, I get nailed. But I will read you a quote from Lenin. Okay, this is Vladimir. He says, the establishment of a central bank, this is a direct quote, is 90% of a communizing of a nation. That's Yellen and Powell. And the other statement from Lenin is, and this is in manifesto here, the best way to destroy the capitalist system is to debauch the currency. So Michelle, every time I've been on your program, I just say the same thing. I like gold, silver, Bitcoin because I don't trust the Treasury. I don't trust the Fed. And, you know, Ron Paul said we should end the Fed. I agree with him. They're actually Marxist organizations. And that's what I cover in my book coming out November 10th, the Marine Corps birthday, is we need the Capitalist Manifesto. And that's why our gold, silver, and Bitcoin are for capitalists.
Well, I'm going to focus a little bit on what you said with a Marxist angle, because this, to your point, plays right into it, this conversation that with the political impasse over raising the debt ceiling, that talk of $1 trillion platinum US coin has now returned to Washington. Now, this would be unprecedented, but not necessarily illegal. There's a 1997 law, which in theory allows the Treasury Secretary to authorize a platinum coin at the value of his or her discretion. So in theory, Yellen could mint a $1 trillion platinum coin and deposit it in the Federal Reserve, and debt ceiling issue solved. Now, look, it's an accounting gimmick to people with critical thinking, but what do you make of this platinum coin idea? Do you think it happening? And if it does happen, what impact do you think it would have?
I'd say it's desperate people doing desperate things. And as you and I know, the stock market, like I said, it's not the S&P 500, it's the S&P 7. And the separation between the stock market and the economy has never been worse. You know, I'm just disturbed because the money is staying only in the investor market. Every time the Fed does something, the Treasury does something, only guys like me get richer. But the money is not going into the real economy. They're not investing. They haven't invested for years in plant and equipment. So we have massive, massive unemployment and underemployment. And that's why I quote Lenin, the establishment of a central bank is 90% of communism. And the best way to destroy a capitalist system is to botch the currency. That was in 1971 that Nixon took the dollar off the gold standard. So in this book here, I kind of woke up in 1972 as a Marine pilot flying in Vietnam. And I went behind enemy lines in Vietnam looking for gold because it was illegal in 1972 for Americans to own gold.
And yet you say that, Robert, that gold is going to crash in this, is along with the equities, along with everything else. So how does one protect one's assets if this crash that you're predicting does indeed happen, if you're saying that gold's going down with it too?
Well, because I bought gold when it was $350 an ounce. You see, every professional investor knows it's not when you sell, it's when you buy. So I bought Bitcoin at 6,000 and 7,000. So I'm just saying, I'm a pure capitalist. When markets crash, it's the best time to get rich. So I'm getting very excited about a crash coming because the better stocks will come available. Unfortunately, Michelle, there would be massive social unrest. That's what I'm more concerned about, because we have not reinvested. The Fed and the Treasury have only invested in the investor class. They haven't invested in the working class. And the working class is without jobs, without pay, without this. Their 401ks are going to get toasted. And that's why I'm more saying, I don't like what's happening. I mean, I live in Arizona. Our southern border is wide open. In Afghanistan, they armed the Taliban. And then they took our weapons, they gave our best weapons to Russia and China. And now the Taliban will use our weapons against our only ally in the region, Israel. Something really strange is going on, Michelle. So that's why I wrote this book a while ago. It's called The Capitalist Manifesto. We have to fight back against socialism and Marxism.
So for an investor watching this and seeing the economic fundamentals crumble, as you point out that they are, seeing the geopolitical unrest and tension, what can an individual investor that's getting this information from you do in anticipation of this?
Well, number one, watch Kitco News. I mean, I have this little headsets on. I've tuned in to YouTube and all the financial markets 24/7. And that's one of the best things about technology. This COVID thing really pushed up technology. And I love YouTube. I listen to some of the most smart guys on planet Earth. And I was listening to Lacey Hunt, and he's talking about deflation. Then I listen to Rickards, and he talks about deflation. And Yellen and Powell, who work for the Fed and for the Treasury, they both worked for the Fed, which again is a communist organization. He'll say so in here. Time to wake up is what I'm saying.
All right, but what should you do? Are you saying get out of equities, get out of your positions, stay in cash and keep that cash on the sideline to take advantage of the crash? What are you saying that an investor who's watching Kitco, who's watching these other channels, who's watching your channel should potentially do in order to best protect their portfolio?
Well, that's a great question, because the only reason you'd be worried, it really goes back to what did you buy?
Yeah.
Remember, your profit is made when you buy, not when you sell. So I remember in 2000, gold went down to like 300 or something like this. I thought I died and went to heaven. I just backed up the truck. So when Bitcoin went to, let's say, 20,000, I was going, well, that's kind of interesting. So when it backed down to 3, then rebounded to 6, I picked it up at 6. And it's 41 today. So your profits are made when you buy, not when you sell. So if you're worried about your position, you probably bought too high.
So you're holding on to your gold, silver, and Bitcoin, clearly. Do you think that after this October crash happens, that there'll be significant appreciation, a significant rally of all of those assets afterwards?
I believe so. That's why I started this whole thing. I am very bullish gold, silver, and Bitcoin, but I'm very anti-Fed and Treasury. And I think it's very interesting that Yellen came from the Fed. And let me repeat, Lennon, again, the establishment of a central bank is 90% of communizing a nation. That's in this book, Capitalist Manifesto. I think we better wake up because our academics, our school teachers, are Marxist. And I'm not saying that my poor dad was a Marxist, but he didn't know it. He's a good man. He's a school teacher. But he didn't know anything about money. Nothing. And so that's what they're teaching our kids. They're teaching woke, critical race theory. I don't know what else is, sexual gendering and all this. Going, hey, why don't you just learn to buy gold, silver, Bitcoin and be okay? You know? And I've been accused of being a racist so many times. And then I was accused of being a white supremacist. And I looked in the mirror and said, no, I'm still Asian.
Right. Yeah.
I'm a Marine.
And we thank you for your service. Now, you touched on Afghanistan, and I do want to talk to you a little bit more about that because there is concern that the debacle in Afghanistan has essentially eroded faith in the US military and the US government. And if essentially the dollar is backed by the full faith of the US government, once there is a decline of faith in the US, that essentially means an erosion of faith in the US dollar. And the Afghanistan move could embolden China to act against Taiwan or create other geopolitical tensions. And then the Biden administration may be revealed as ineffective there again, and that would further erode confidence in the dollar. So what are the long-term consequences, do you think, on the US dollar and economy of the Afghanistan withdrawal?
Well, it just shows how cowardly Biden is. They put a Marine lieutenant colonel in jail, because he criticized our Joint Chiefs of Staff. They put him in solitary. What's happening to this country? But the interesting thing is, because you always got to be optimistic, is China then flew their jets over Taiwan. Now that's really good news, is because Arizona is known as Silicon Desert. So Arizona already has Taiwan semiconductors being manufactured here. So when people say, well, how come you're in Arizona? It's hot. I said, because Taiwan Semiconductors is here.
So you're predicting that there'll be tensions between China and Taiwan, which will then benefit Arizona because it's well positioned to take over the big semiconductor sector.
I think this Biden and Kamala, I'm not a Republican or Democrat. It's a free country. You want to be a communist, you want to be a Marxist, you want to be a fascist, you want to be a Republican or Democrat. I'm a capitalist. I just look at things like this, and I think what happened in Afghanistan, because I was part of 1975, the evacuation of Saigon. What we have done, we sold America down the drain. And I'm a Marine. I went to military school. And so I'm pretty hard line on that, but I'm not stupid. I'm not stupid. I don't believe these politicians. Donald Trump and I are good friends. I know he's hated, but he and I are good friends. He's a capitalist like me. Kamala and Biden are Marxists.
Well, of course, it's still a free country, still, for the most part, so you're still entitled to your opinion. Yeah. Although sometimes one thinks differently with the way the cancel culture plays out. I do want to get your opinion on this idea of a digital dollar, a so-called Fed coin, central bank digital currencies that the US may follow in China's lead, which means that there will be total control of every single currency unit. Do you think that this could happen in the US?
Michelle, I think you're on the pulse. I'm more afraid of the Fed coin than anything else. It'll totally be central control of the economy and our lives. They'll monitor everything we do by how we spend our money. Our freedom will be gone. So the Fed coin and what happened in China, they just denounced Bitcoin. I think they want to take away all of our rights with gold, silver, and crypto and go back to full centralized control. Just look at it again. Janet Yellen came from the Fed. So does this guy Powell. It's now the Treasury and the Fed are one centralized government. So I would suggest you study your history and just look at it. Look at the borders. I mean, in Arizona, we had 34,000 undocumented immigrants cross our border. Why are they doing that? And I talked to this guy, Sheriff Mark Lamb, who is the sheriff of Pinal County. He says the federal government is tying their hands. They cannot do anything to stop these immigrants from coming across. So that's why I wrote this book here, The Capitalist Manifesto. Is something is fishy going on. It's been going on for years. So that's why the book starts with me flying in Vietnam, going behind enemy lines to buy gold. In 1972, an American owning gold was illegal. So I bought my first gold coin, a South African Krugerrand in Hong Kong, and I became a criminal because in 1972, I had to smuggle that damn Krugerrand into the US. I still have that Krugerrand today. I paid $50 for it. So I'll say it again, your profit is made when you buy, not when you sell. So I'll probably never sell that Krugerrand. I don't have to.
But Robert, you just said that you do anticipate that the government may make Bitcoin illegal, especially if there is the Fed coin, the central bank digital currency, taking the People's Bank of China's lead there, which, as we said, is tremendously disconcerting in that it is a complete eradication of privacy and total government control. So if you think that the government is going to step in and outlaw Bitcoin, why does it make sense to invest in Bitcoin?
Well, right now it makes sense to get out of the reach of the Fed and the Treasury. Let me read you one more statement from this book, Capitalist Manifesto. It's by Lenin. Fascism is capitalism in decay. So therefore, that it's not just Fed coin. We're forced to wear masks. We're forced to get vaccinated. As we speak, thousands of healthcare workers are losing their jobs. Military officers are losing their jobs. This is fascism. So Fed coin is one more step into fascism. So what I am doing is I am buying gold, silver, Bitcoin, and cash, and I hate to say this, bullets, because I got deplatformed for that, because they're going to start track with this blockchain. They can track everything, so they can, as I forgot the comedian, but he said they're going to track you by your bullet, so they can track everything now. So I want everything possible, gold, silver, Bitcoin, and my bullets, that are not trackable. You cannot trace me. So as I've said on Kitco many times, and I love you guys, is that gold is for saving, silver is for spending, and and bullets are for protecting. You've got to control that for yourself.
And where do you see Bitcoin and Ethereum fitting into this picture?
We're going to become outlaws. We're already outlaws. I mean, when I talk to the young hodlers and all this stuff, I'm old enough to be their great grandfather, but we're still rebels, you know. We still refuse to have our hands tied and let off to jail, like that Marine Lieutenant Colonel did for criticizing the Joint Chiefs of Staff. We're losing our freedoms, Michelle. I'm a Marine. I didn't fight for Bitcoin or gold. I fought for our freedoms. I didn't fight for Republicans or Democrats. I fought for our freedoms. And so that's really my concern today. That is my concern. We're losing our freedoms. And that's why I wrote Manifesto. And all the quotes in there, we've been warned for years. We have been warned for years. Let me read you Khrushchev's warning from the back of the book. It says, your children's children will live under communism. You Americans are so gullible. No, you won't accept communism, all right, but we will keep feeding you small doses of socialism until you finally wake up and you find you already have communism. We will not have to fight you. We will weaken your economy until you fall like an overripe fruit into our hands. Nikita Khrushchev, 1959. We've been warned for years, Michelle, but people don't listen. The problem is our academic system. We don't teach anything about money, and we teach people critical race theory and what would they teach? I don't know, racism. Why don't we teach them about money? That was Rich Dad for years and years and years. Why don't we teach kids about money? And money is gold, silver, and today Bitcoin.
Well, speaking of Rich Dad, Robert, and certainly one can see that the pandemic has created an environment for unprecedented control over people. And we know that there have been pockets of uprising against this. But this is an economic channel, so I'm going to bring it back to investment advice. You've long advocated for investing in real estate as a source of income, one of the biggest premises of Rich Dad, Poor Dad. Do you still suggest investing in real estate, in the real estate market now?
Absolutely. You want to invest in things that last. That's Jim Rickards. Invest in what lasts. But this is the key. Let me explain something. Behind me is my cash flow board game. There's two tracks on the board game. There's a rat race, which is a 401k guy. And then there's a fast track. That's a capitalist track. In other words, this is it here. Okay, so this is this is book 2 of the Rich Dad series, ESBI. So our schools teach us to be employees and self-employed like doctors, lawyers, and stuff like this. Capitalists teach people to be business owners or brand owners and investors. But the only way you get out of the rat race is via a thing called a financial statement. So if you read Rich Dad, Poor Dad, and if you read Cash Flow Quadrant and you play the cash flow game, you have to have a financial statement. Your financial statement is what your banker wants to see. So when I go talk, I just borrowed $31 million a couple of weeks ago for a piece of property in Austin, Texas. If I didn't have a strong financial statement, I couldn't borrow $31 million. And so what's happening today is the poor and middle class who went to school, they got their jobs and all this stuff, they're being wiped out, while the rich are getting richer because everything the Fed prints stays in the asset class, not the business class. So we're screwing our own people by not reinvesting in plants and equipment for jobs. The Fed and the Treasury are destroying our country.
Well, Robert, what can people do other than, of course, read your book, Capitalist Manifesto, which is out November 10th? What can people do?
Today, I'm saying the same thing. In my opinion, all the smart guys are saying, silver is your best investment. Silver is 50% off its all-time high. I love silver. I mean, I just bought some more. I mean, I don't mind. I buy silver mines, but I also buy silver coins. So let me just say my simple philosophy as a capitalist is, gold is for saving, silver is for spending. So if the S hits the fan, as you know, I'm going to be spending my silver. And I'll have bullets to protect me. Whereas what they want to do is take away my guns. Second Amendment. That's why I wrote Manifesto. I am a Marine. I will use my guns.
Well, Robert, I look forward to reading the book and having you back to discuss it in depth. Capitalist Manifesto out in November. Thank you so much for joining us, Robert Kiyosaki. Really appreciate it.
Michelle, thank you for your courage letting me say what I say, but I do appreciate that. Thank you.
Well, we just want people to have access to information, be critical thinkers, and be able to make their own opinions from the most educated place possible. And we thank you for helping them to do that.
Thank you.
All right. Thank you for watching. Keep it right here on Kitco News.
Chris Vermeulen is back to break down what's happening with the markets and make sense of it all. Chris, it's been a long time. Welcome back.
Yeah, thanks for having me, David.
It's been almost a month since we last spoke. I'm going to start with a series of statements covering a variety of asset classes, and just tell me from 1 to 10 whether or not you agree or disagree, from 1 being most strongly disagree to 10 strongly agree. All right, so let's start with gold.
And now we're going to move to another issue of the morning. Big story. Facebook whistleblowers now accusing the social media giant of misleading the public and the company's investors. Former product manager Frances Hagen saying that Facebook places profit over safety when it comes to its products. We're joined now by a company executive, Monica Bickert. She's the vice president of content policy at Facebook. She's with us on the Squawk Newsline. Monica, you watched the 60 Minutes interview last night. And effectively, she said that the company changed the algorithm such to create more engagement by surfacing stories that involve either misinformation or effectively hate. What do you make of that?
Well, first of all, that's absolutely not accurate. The news feed algorithm change that was referenced was from 2018, January 2018. That was designed to prioritize meaningful interactions between friends and family. So basically to have the exact opposite effect. It was supposed to connect people with the ability to have conversations with their friends and family, which research told us would be good for people's well-being. And since then, of course, we have, and by the way, we knew that would have a hit to our business, and there was a hit to our business. But what we've done is continue to watch how the news feed experience is for people, and we've continued to make refinements to it over time. And so if you look, we actually published our demotions, meaning the types of content that we reduce the distribution of the news feed. And if you look at those demotions, you'll see that we actively work to reduce the visibility of engagement bait, clickbait, sensationalist content. So we are doing exactly
Speak to this then. I mean, part of the report identified a document from leaders in the EU that suggested that they needed to move their campaigns to be more aggressive on sort of different sides of the aisle to get the right or enough engagement.
Well, anecdotal feedback from people about why certain posts that they have posted are doing well or not doing well is not the same thing as showing that we have somehow decided to prioritize clickbait or engagement bait. We have done the opposite. And the meaningful social interactions change, which was the January 2018 change, was something that actually, as you probably know, had an impact on reducing news content and public content and the sorts of content that might lead people to polarization. And, this is a stat, Andrew, that I think people don't often realize. Only about 6% of the content in people's newsfeed is political content. That is not what we are about. We are about trying to connect people with friends and family, groups and pages they've chosen to follow, sure, but this is about giving people a place where they can have meaningful conversations. And, just kind of a funny anecdote, but if you think around the elections, we saw more of an increase, in fact, double the increase in posting on Halloween, about Halloween, than we did about the elections on Election Day. So, this is a place where people can connect with family and friends, and it continues to be so. And any suggestion that we are trying to prioritize engagement bait is blatantly false.
Let's talk about some of the mental health issues.